Welcome back to Next Gen Investing Under 30 Time. George Tsilis, Senior Markets Correspondent for the Schwab Network, here to help us discuss Supermicro Computer. George, you know it's a party when SMCI is on the rip higher, 16%. The mighty are on their way back. What are your thoughts?
Well, obviously, I mean, looking at the stock, it's having a nice day, and I think the story behind Supermicro is really sort of a hidden story where we know that there were some financial irregularities going back to last year that took a few quarters for them to clean them up and restate their earnings, to which they actually stayed. They didn't have to restate anything from a insignificant standpoint or essentially any legal issues. But nonetheless, this is a name that is facing some competition in the space for high-performance server technologies with the likes of Hewlett-Packard and Dell. But as we've gone forward, and the stock has really been, to the downside particularly since February, after there was the reaffirmation of their financials, it's been down with the markets. But we're seeing a lot of appetite right now, a lot of risk taking back into the AI hardware space. And one of the things I'm going to do is, if you look at Nvidia, Nvidia is actually up higher quite a bit in the past little while or a couple of weeks. That's, of course, in the context of the markets. But one of the things I did notice from a seasonal standpoint is Nvidia typically on the month that it reports earnings, so this is 4 times a year, it actually performs quite well. And so what we are seeing also with Supermicro moving higher is it's really moving in sympathy alongside Nvidia. Now, just to keep in mind that stocks aren't operating alone in, of course, a vacuum. They have to have some financial fundamentals to back them. And if you look at Supermicro's earnings estimates for this year, they're over $2 a share, about $2.10. So it's only trading around 16 times this year's earnings. Next year, the company's expected to earn about $3.80. For what it's worth, there's also potentially some value as well as growth in this name, and that's why I think it's moving higher.
George, do you think this is more of a valuation and fundamental story for Supermicro, or is this now turned into just a trading vehicle for the speculative retail trader that is out there? I mean, 2 weeks ago, 3 weeks ago, George, they were dropping their guidance and moving their guidance lower because of demand issues. So it seems like every week we got a different narrative.
Yeah, so that's the thing. I would suggest it's probably a combination of both. It's a trading vehicle just because of the market capitalization. It's a high beta name, and once it catches a trend, whether it's on a 5-minute chart or maybe even on a daily chart, there's a lot of buyers that step in. I do think that there are some challenges, and I alluded to a couple of those just a moment ago. One is the competitive challenge, and two, irrespective of the move that Nvidia is making, you have to consider what they said. And for a company that just goes back, Nvidia now, for a company that's talking about, not able to meet demand, they actually took a $5 billion charge, which again is kind of confounding considering that they say that the demand is extremely robust and they can't keep up with it. So I think Supermicro, again, is still volatile. Even though they're a profitable business, they are very, very volatile in terms of their earnings estimates, which change quite dramatically. And that can be good and bad, so you have to keep that in mind. So I think if you want to play the high beta realm of artificial intelligence hardware, this is certainly one that's very attractive just because of the market capitalization. In fact, I mean, if you just look at a dollar move in Nvidia, it's around $25 billion, which essentially is almost equivalent to an entire Supermicro computer company.
It's a good point.
With
George,
that said,
one more question for you. I want to get out before we run out of time here. I see this Raymond James initiation, outperform is the rating with a 41 price target. This is a stock that after this move today is trading at $38 with 81% in volatility. I don't know how you can say something is an outperform rating when it has $3 to go to your price target and it trades with 81% volatility. What are your thoughts?
Well, I mean, it could be that they put that target out there or started constructing that target, maybe a week or maybe a half ago. So that's another thing you have to consider. It's moving so quickly. And again, like I said, if you just look at the split between this year and next year's earnings estimates, one would say, all else equal, that the valuation may be compelling in this name, but it's very compelling at a very volatile clip. In other words, you have to consider the high beta aspects of this particular stock because of its nature.
George Tsilis, always good insight. We appreciate you stopping by. As always, Senior Markets Correspondent for the Schwab Network.